just want to explain the entries or the ICT entries. Right. So what you have to know is you have to use H1 to find the change of character, POS. So yeah, if you are, let's say, intraday trader or swing trader or scalper, you have to know which time frame to use. But for us, or if you're a beginner, maybe you might be trying to avoid being charged with those square fees. So you have to trade only during the day and close your trade. Your trades. Maybe you might choose to trade during the Asian session, London, even the New York, depending on how good you are or when we set up here. Right. So let me just explain the structure here. So let's say we are in an uptrend. Let's say we have candles going up there. So what will happen actually is the market will then retrace down to this level. Then after that, what you'd expect is the price to go up. So what will actually happen is before it goes up, um, this level here will be swept, meaning to say there will be a candle which goes, let's say for example, below here, then close above this level, which means the candle must be a pin bar. Then then the candles will start to go up, then break this level, then break this level. Let me just write it. So let me write it. BOS, right? So this area might be called BOS. So actually, this is the H1 which I'm using here. We are in an uptrend, so the candles will go going upwards, then a retracement, then a sweep of this level here. Then the candle will be closing inside that range. Then a break of structure somewhere around here, and the candles will continue. Just make sure that the candles will close above this, and that is the H1. Then what will happen is you have to enter either the 5-minute or the M15. Then you start to see candles going something like this. Then up, then down, then up, then down, then up. Yeah. So what will actually happen is at this level, somewhere around at this level, let me make this clear. Which color should I use? I think I should use the black color. Yeah. So in this level, there might be an order block in the H1, or you might see let's say an AVG in the M15, right? So what you decide to do is, if you are using the high time frame to confirm the order blocks, it's fine, or the supply and demand zone is still fine. If you use AVG, maybe just make sure that you are in the lower time frame. Then what will happen again here is something like this. You might also notice a sweep also in the 15-minute time frame. So somewhere around here, this level here, will be swept also, meaning to say we have a candle, or we have something like this. We have a candle which, let's say for example, candles are going down here. Then at this level, the candle which will be formed, let's say starting from here, it must also close back inside this level. Then after that, this uptrend or this up candles will just have to break. We just have to break this level again. That is the M15. That is the M15. So this is now called the market structure shift. So let me just write it again. Market structure shift. Market structure shift. So MSS here, save. Right. So we have our market structure here. Right. So what will actually happen is just make sure that the candle which closes above this one it must be complete or a bullish candle, not a pin bar or a bearish pin bar or smaller candles. Just make sure they are bullish candles or strong candles, right? So after this, you would expect the price to come back again. Right, so it depends with how the candlesticks are moving. So if they are moving way too aggressively without any too much noise going up there, you would expect that they would, let's say, arrive this level, then comes back down here, or even comes back to this level and then react. So you have to take note of that, of how the candles are moving. Then after that, you would expect the market to go up, maybe up to this level. So what I do most of the times is I open my fib levels. I open my fib levels, then charge from this side to this area. Yeah, then I would expect the price. So my entrance is somewhere around this area or this 50% zone. Then I would expect the price to be somewhere around there or to go somewhere around there. So I would place my buy limit somewhere around here. Then my TB somewhere around here. Right, that is how I use my entrance. Right, so it depends with you. Maybe you might just want a TP which is 1:2 or 1:3 or 1:4. Depends with how you operate. So this is it. So let me just rewind again before going into the charts. So I said we have candles right going up here. Then they retraced a bit. Then they go up again. Then they break structure and it's in the H1. Then they'll start to make some deep retracement. So lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then a sweep candle getting back inside this level. Then the market structure will happen here in the lower time frame, which is the M15. Then it comes back here. Then it went up again. Right. So this is the concept or the main idea the ICT users use. So yeah, I do advise maybe the sweep might happen, let's say for example, 2 days or 3 days before, or even the day before. Um, this sweep around here might happen during the New York or the London session. Then this one might also happen during the New York or the London session. So another question might come: why is it that it's hitting somewhere around there? It's just because this this area. Let me just put it this form. It's been swept or the stop losses around here have been taken. So there's nothing left to go down there, or there's no liquidity to go down there. So we'd only expect the price to go up, then it comes down here again in this level. Since there's no liquidity down here, we would expect the price to find liquidity somewhere. So since we deal with the probability in trading, it also happen that this area might be disrespected, or the trade might go up, then down, then it went another way. it happens. This we deal with probability. Then there are some situations whereby you might face this type of setups. Let's say it is broken this level, or it might fail to break this level. It might fail to break this level. Then it will do something like this. So this would expect what we call a change in state of delivery. So what will happen is we have this sweep happening, then down candles, then up candles. So what they will do is it will break this level here, somewhere around there. So let me just put it somewhere around here, somewhere around here. Right, so let me rename it to CISD. 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 Somewhere around here. So your entry is going to be something like this. Since it is broken this level here, then it will end up breaking this level. You would expect the price to return somewhere around here, then your entrance might be here. Then after that the price will shoot up. Mostly it will shoot up without any too much corrections. Or what you might just found is this area, this level here, might also be swept. This is because this level has now created some liquidity down here, so the market might need to sweep it. So let's say if you're entering at this level, you just have to put your stop loss still at the same area down below here, then your TP less around here, or whichever way you use it. Even using my fib levels is still okay. So then another one again, another one again. All right, so here's another one. All right, so the market might do something like this, something like this. Then it fails to go up. So you do expect the market that it will go down, then sweep this liquidity, then goes up again. All right, so that is it. Then you might also get another one, another confirmation. So it will not break here, then it will comes back down here, forming like a head and shoulders pattern. Then it will break this level, then it comes back around somewhere here or here. Then you have to enter with your stop loss around here, then TP. I think that is it for today.